Welcome to Real Money Talks. Real strategies from the moneymakers and the world changers that you can use to make millions, keep those millions, multiply your wealth, and build your team. Here's your host, author of 5 New York Times bestsellers, money expert on Dr. Phil, CNN, CNBC, The Street TV, Fox News, and The View, Laurel Langmeyer.
So I want to include Eileen now. Randy, do you have something to say? You look like you had something to say.
No, I was just going to add one little piece to this, and Kelly and I were discussing this actually this morning. Though the recovery is not going to be in a day or a week, this is also not 2007, 2008. This is more like 9/11. This is a short-term event driving stuff way down. It's going to take a hit in the economy. It's not going to come back in a day. This also isn't going to be a 3-year process to get the economy back. So, we got to remember that the economy was humming along pretty darn good before this happened, and it'll come back much quicker than in 07, 08. That's just something to be aware of, and echo everything Weldon and Adam said.
Randy, one of the things too is, and then also Laurel, the type of business that you're doing, if you had a big online presence, you're probably not going to be hurt too much. You look at the Amazon stock, the reason why it's still staying the same or maybe going up or ticking up with the normal volatility is because they deliver. They don't require on people coming into the store. They don't require people to be physically there. If you can deliver this, and yeah, Laurel, I know you love being on stage, but right now, this is the new world. And if we were prepared for it, then it's not really that big of a transition. It's the people who weren't prepared for it that's going to have a tough time to transition. In my own business, we've had the technology and the ability to be remote and anywhere. Yeah, we stopped seeing people in person, but it's like it doesn't really matter for us on the technology side.
Yeah, this is our new stage, folks. This is like a multi-speaker event all in one screen. So it is.
Laurel, could I add something?
Absolutely.
One of the things that I think also people in America should recognize is what we're doing here in this country, locking down things in other countries throughout Europe, is not happening in Asia. So, for example, Japan is business as usual. So is South Korea. So is China, 90% back to work in China, where the virus obviously began. What's happening here is a panic that is caused by this, I think, overabundance of caution. And as a result of that, we all have to understand that very likely that this virus will affect 50% of the planet, even though we don't know all of these numbers. And I won't begin to go in that direction. But even if it does, the reason we will come out of this in a few weeks, and when we come out of our homes, the market will more than likely rally. And as if it does over the next number of weeks, the longer we're stayed holed up, the more the market will have reason to keep in a panic mode. So once we realize that we have to accept and live with this virus, is the same time that we're going to see the markets bottom at some point in the future. So this is just not permanent. It's actually, in many ways, irrational, given the way other countries are managing these problems. And by the way, with very manageable and low fatality rates based on the numbers that are becoming better and better because the sample size is larger every day.
Yep. I'm getting some questions. Steve, I'm going to have you just read them. So I'm trying to multitask on all these devices. In about a week or so, I'm going to be able to do all this like technical stuff I've never really, been doing. So putting cash in your pocket or holding off on buying things, I think, Kelly, I've used your words. If you're kind of in that moderate, you're not like in survival, but you don't have a lot to work with. We were listening to some other folks' speeds. They said, what if I only have $10,000 to invest? Eric and Tim and I are going to get to the real estate side because I think there are opportunities to partner together and to work together. And you could always, get into the real estate market. We haven't seen a lot of, movement in that. We'll talk about that in a moment. But putting at least money to be stored, it's very liquid over at iFlip. So again, there is the flip out there. You can search it on your phone and search it on either of your app stores. consider what other investments to invest. I think Kelly was saying, you said nibble at it. I think you said, like this is a big apple. If you look at, especially those of you who've never really invested, and we're an off Wall Street group and we're in the market because it's where you need to be right now. I mean, I teach off Wall Street. My God, I own the trademark of off Wall Street assets. Couldn't be more definitive, but Flip is I'm going to say the safe place for a lot of you, and it's very liquid and it doesn't cost you anything. So take some nibbles at it instead of, spending the $1,000. If you needed it, you could always go back and get it. I think it's important for you guys to know that as well. Eileen, I want you to jump in and bring credit and credit cards to the conversation. We're hosting our own internal client conversation called The Big Table yesterday. Eileen brought some just great insight. She is a credit specialist. What to do with credit? What are the credit card companies doing? Give us some insight to that conversation.
Absolutely. So I want to go back to the very first thing that you said when we started this entire conversation. Know your numbers. When you have a spreadsheet or a balance sheet, whatever format you want to put it in, and you have everything listed down, your household budget and your credit card. So when you have that list of all of what your credit card information is all about, you want to make sure you have the account number listed. You want to know what your open to buy is, how much you've actually been spending, what your balances are. That brings you to what kind of utilization you're having. All of this is important information for you to know. You want to put on there what your due date is. And the biggest thing you want to know is what are you actually paying for that, having that credit card. Now, 46% of Americans pay their credit card bills off in full. I was surprised when I saw that statistic. I did not realize it was that high.
I didn't realize it. Yeah, it's surprising.
It's a beautiful thing, but most of us don't. So I want to give you a couple pointers of what you can do now, because this is a great opportunity for you to really take a solid picture of what's going on in your credit world and make it better for yourself and your family. So once you have that spreadsheet and you have that list, now I want you to call your credit card companies. They want to work with you. They would rather you negotiate something with them and ask to either defer a month payment and not be dinged on your credit reports. They would rather have you do that and have that conversation because they're still making money off of you for that other percentage is not paying those cards off in full. They're still making those interest rates off of you. But take the time. Don't be afraid. If they want to work with you, just give them a call. I actually did it for myself yesterday before we got on our call yesterday. And they were so willing to work with people. I was very pleased. And we're talking about some of the big name credit card holders or credit card companies in this nation. So have the conversation.
Yeah, and Eileen, part of the conversation too, I mean, what about asking for lowering interest rates or increasing lines of credit so people have more availability?
Absolutely. Those are the three things that you want to talk to them about. Number one, can you increase the limits that you have on your current card? And of course, Adam pointed to this earlier, it's going to depend on where your current credit score is because they want to work with you with that. Then you want to be able to negotiate what your interest rate is. Again, based on your current credit situation, your credit scores, how you've been using your credit, they will be more than happy to help you work with that. Listen, a credit card company does not want you to default on your loans. They do not want you to miss your payments. You don't want to go into arrears in any of that. They will work with you. It's just having the information in front of you so you have all of your documentation. You can now intelligently speak to them about your particular account and just be nice. Just be humble. Just let them know, look, I know what's going on in the world. You know what's going on in the world. How can we make this work for all of us? And the second point of that is do the same thing with your auto loan. You can defer to the end of your loan a month or two. They will work with you on that.
Awesome. Great insight. Appreciate that, Eileen. Stay tuned for questions on that. In fact, Steve, I want to go out to some questions. So actually, there's a question, Randy, that I need you to ask. Canadian Mobile, how do they download it says Flip Invest. So we put it up the web version. Okay.
They got to use the web version. So there's a text. I sent it to Steve. Steve can send them the text code that they can text to get a look at our web app if they want to do that.
So those of you, if you're out live here on Instagram, Facebook, or a different platform, we're going to have the replay of all of this. It'll be in the chat. Actually, Rand, if you want to recite it out verbally for the desktop. So, because we have a lot of international clients. Like I said at the beginning of our broadcast, countries we haven't heard from or do a lot of interaction with. People are really seeking advice and help right now. So if you want to read it out, so the desktop version.
Yep. Just text one simple word, all lowercase letters, invest. Text that word to this number, And I'm putting it in the text box right now.
You put Laurel or Invest?
No, Invest is for the web. Laurel is for the mobile. So they're two different ones. You got 2 codes, Laurel.
Look at me. I'm tracking, just so the rest of you know, is I want to know what kind of impact we're making, because I think it's really important. Randy and I have been, together in this journey through Flip, and it has never been so necessary. And actually, Randy, I want to talk to that. There was a few questions in an earlier chat line from the Ask Laurel Just Feed, is what's the difference between, and you can't have 30 minutes to talk about it, but between Flip and some of the robotic traders. And we know what it is, but let's clarify, because some people do have robotic traders and believe that the robot's going to take them out, and it's not going to take you out as fast as Flip's going to take you out.
Well, yeah, think of a robot as a simple algorithm, which is just mathematics. It's a mathematic program that's finite and fixed by a person that says when a stock reaches a certain price, you buy it or sell it. And then the technology does it. AI, which is what our platform does, is a series of algorithms in the background running the certain algorithm so that it learns. It's machine learning. So it's designed by its very design, it will be more accurate in predicting big downturns. Up until yesterday, we were 90+% cash. We weren't in the market. We haven't been in the market through the majority of this downturn. So now we're just starting to get back in, and it still might go down a little bit, but that's okay. It's not going to go down forever. And Kelly's here too, so he can answer that probably better than I can.
Well, we have a new question. What about gold and silver? And that's been coming up through a lot of the questions as well. As soon as you answer that, I'm going to switch gears because I got to bring Tim and Eric in. Let's talk about real estate. Real estate's where I became a millionaire. Gas and oil is where I became a millionaire. There's lots. It's interesting with gas and oil, Kelly, too, because it's pretty rare I go to the stock market for gas and oil investing, but it's hot right now. So talk about commodities, though.
Well, in terms of, let's go quickly to precious metals. No, they're not behaving well. Let's face it. If you look at the gold ETF, GOLD, and some of the other ones offered out there, they're just not behaving the way you would expect in times like this. And the reason, of course, is panic. They're throwing the baby out with the baby water. They need to raise cash because when people are afraid, they sell everything. In terms of, on a global macro front, we have commodities. Some of them, of course, are precious metals, but other ones are oil. Let's look at that.
Yeah.
What we're witnessing is demand destruction. Demand destruction means that people, especially this one is so obvious, we're all holed up in our houses, really know where to drive. We're not taking vacations. We're not going to hotels. We're not getting on jets. That's why soon some people in the Southwest may even see gas prices go to $1 a gallon. Right now, it's priced at $1 a gallon after taxes in some of the southwestern states, like Arizona, for example. It could go to around $1.10. So I think on a global macro basis, things like that have to be avoided until we see some process of demand. Right now, buying anything is like catching a falling knife. You're going to get cut. That being said, if you don't mind getting cut and you feel that oil at, by the way, 20-year lows is a good bet, you should, again, get the app, buy some Exxon Mobil or things like that, which have been devastated, and you can watch a high-yielding dividend stock resume at some point. So these oil companies are not going away. We're not going to electric cars. We see that Tesla has been decimated. It's down from $1,000 to $360. So we've seen this kind of enormous destruction. On the global macro fund, no, there's not really an investment unless you're willing to bleed a little bit before you own it.
Awesome. Kelly, we appreciate you. Again, those of you, if you're just joining or been here throughout the broadcast, each of these experts will have some independent time where we'll go deeper. We're going to be talking every day. This is our new stage, our new platform. We'll be live on YouTube, Instagram, Facebook, and continuing to give answers to your questions. Again, those of you, if you've just joined, go to the private Facebook group, Millionaires in Training. If you want to have a very private, confidential conversation, again, we want you to come with the P&L and balance sheet. So again, our team has put that in. So in basic terms, how much do you make? How much do you spend? That's what we really got to know. And for Eileen to help you, it's got to be in a lot of detail so she can help guide and navigate through the credit and credit card world. I think, Randy and Adam and I were, getting prepared for the call is, who do you want to be at the end of this? You can be the person who walked into this and you were survival, and you barely knew how to get your paycheck to paycheck. You could walk out of this a millionaire. So together, our collective knowledge is what we've always talked about. So many people say, well, I just want you to be my coach, Laurel. I don't need the whole community. You need the whole community, because here's what's also going to happen in our conversations in the coming weeks. Adam's going to have an opinion. Randy's going to have an opinion. Eric's going to have an opinion. Weldon's going to have an opinion. I'm going to have an opinion, and we're all right. It's how do you put the creativity of finance, which a lot of you don't realize is creative, and how do you put that collective genius into your plan? Our commitment is to help prepare you for your plan. How are you going to walk out of this? Who are you going to be? Are you going to take this as a vacation, or are you going to take this really serious and say it's time? It's time to live. In addition, we're not saying go quit your job, but it'd be nice to have a different paycheck than just your job. Right? Have another paycheck. There's so many skills that a lot of you are sitting on and you don't know it. This just happens to be our conversation. And Randy, I'm glad you brought up 9/11, because we have lived through many downturns, but nothing like this, nothing worldwide, nothing like this, nothing that also affects your very being of your health. So this is really, really serious, really critical. We want you to fill out, what are you making? Go to the Millionaires in Training, request a private conversation. This isn't a sales pitch for what we're going to do. We're going to give you some resources and move you on your way. And as things change week by week by week, we're going to keep you informed. You make your decision. You make your plan. We're going to be here as a trusted source for you to be available. All right. So Tim Kristovich, he is in real estate, been a developer. I was down here just last week saying nothing's happened in Boise, came home to a little bit of activity in Boise. So update us on Boise and what you're seeing in the market, the real estate market specifically. And then I'll bring Eric, who's actually out of Florida, also has real estate in the Houston market. And again, each of us are going to go into depth. We're not going to keep you on for hours and hours and hours and hours today, but we will every day come live with deeper content in each of these content pieces as we're on this journey together.
Everybody seems to be hunkered down in our area now. A lot of the restaurants in downtown Boise's closed. They're only serving food to go. As you get further away from Boise, a lot of restaurants are only open certain times of the day. But I was in a couple restaurants yesterday. Nobody's in there. It's quiet everywhere. Talked to different realtors. I talked to my personal realtor, and I had another conversation with one today and a couple others the last couple of days. They're telling me that the market still has a high demand here for real estate. We have no inventory here. They have people wanting to buy houses, but we don't have any houses to sell. I don't think people's going to stop buying. I talked to a fellow, a longtime investor that I've worked with over the years. His only concern was that people may have lost their down payments in the market. But not everybody leaves their money in the market for a down payment. So, we may lose a few people, but that's to be expected. I think the other thing we're going to see here in this area, one of the things that drove people here the last 8-9 years is people leaving California and other areas like that, coming to a smaller area like this. I think this is just going to drive more people here. Real estate, in my opinion, is about your location and areas. Some other areas may not do as well just because of the area you're in. But if you're in the right area, I think you're going to do really well with this, because as people were still needing houses before this happened, they're still sitting in the same position, even though this is all going on. So they're going to continue to need homes and need places to live. So I think real estate's a good bet. We may see a little bit of a downturn, but I don't think we're going to see much here, if any. Well,
and Boise is such a demand market. There are people literally living in trailers and RVs waiting for homes to be built. So, Tim, talk about the mortgages and what you're seeing, because I know one of your partners is a mortgage lender. What we're hearing, and actually, did some of our own intel, is that some of the banks, right, are increasing that. So you really got to do a cost analysis of whether refining at this point is really, depending on how much real estate you have. If you have one piece of property, but if you have quite a bit, how are you going to do all the fees? So talk a little bit about mortgage. I mean, from our perspective, I'd like to see a lot of pre-sales, the use of the mortgage and pre-qualifying people early. Tim's just breaking ground on 50 homes, a bunch of fourplexes, an apartment, a lot of real estate being built in Boise.
Yep. If you are looking for a home, it's a great time because the interest rates are so low. It doesn't matter if you're buying or selling in real estate. It's a great opportunity for anybody to look at it. The interest rates are low, inventories are low for the sellers, and I believe there's going to be more and more money out there for people that they're going to offer to help stimulate this market as it starts to come back out of this. And they're going to make it easier to get loans just to help move this thing quicker. I think people need to be more proactive and not reactive in life. We get very reactive. We see this guy, one person says something on the news and this person says this. They start reacting to this. I think we just need to, people need to keep their heads about them and just realize the world's not really changing. We just have a situation we have to deal with. And let's just make reasonable, intelligent decisions. And I think your lives are going to be way better off if you do that.
Well, and I love that just, we started 2020, and one of the themes I brought forward was we've been just, talking about money for so long, is keep your common sense. I mean, there's some things that just, I think a lot of people just forget their common sense. Like, does that even make sense? And the reason we've always existed is for the conversation. And I think a lot of people come here for advice. We aren't really going to give you advice. We're going to facilitate your advice, because the truth is only you know what you want for you and your family. And then you just don't have enough variables, right? What you have is what the traditional markets tell you, what the traditional financial houses tell you. You don't have access to the alternatives, like self-directing your IRA. Like, there's a lot of people right now that coulda, shoulda, woulda, and still can. Self-direct your IRA, right? Get a Roth, open a flip account. All these gains could go tax-free, tax-deferred. We're going to give you all sorts of that cool stuff. Just a moment, I got to bring one more amazing gentleman who actually is going to be a partner on radio. He's been on radio for 21 years, longest standing radio show. We met in Houston a while back, and I agree, Eric. In the world, I'm going to say it. Unlike the Super Bowl, I love when the Super Bowl, somebody wins one of our teams, and they're like, and we're the greatest team in the world. No, only the United States plays. I'm married to a Canadian, so I hear this all the time. He's like, how in the hell can you be the greatest football team in the world when you didn't play the damn world? You played the United States. My point is, I actually think you are the longest standing real estate radio show in the world, 21 years, 5 days a week. And I'll be coming live with Eric Wilner. So, Eric, where are you today? Are you there in Florida?
I'm here in sunny South Florida, enjoying my self-imposed quarantine here.
Awesome. So talk a little bit about just not the show as much, because you and I will be coming live a lot. And just so you know, Tim, right on the screen with you is the gentleman that we've been talking about, some of the EB5 program, which those are still going to be thriving, and bringing some of the folks from Brazil and other countries. So just so you all meet each other as experts too. So where are you coming from today? And talk about what you're seeing in your real estate, not the show, but the markets. Like, you're in some pretty hot markets, Florida. How's it being affected there?
Well, Florida and Houston and, as you can see, Boise, we're coming off a great market. And that's really, I think, the fortunate thing. And the other fortunate thing is that I also believe, I don't know when it'll be, whether it'll be 2 weeks, 2 months, or whatever it'll be, that this market will recover. In fact, many people will look at real estate was probably one of the more stable places to be. As I was talking to a lot of my landlords who come and talk to me and say, where's real estate going? As if there was a crystal ball. But the fact is that rents are still coming in on a regular basis. The properties are holding their values. They're hard assets. So that's always a real positive thing. I would say, in fact, I like what I've been hearing from across the panel. The number one word that I was hearing is discipline. You have to have a little bit of discipline here and just stop for a minute, take a breath, take an opportunity to assess what's going on. Whether you're talking about the $1,000 stimulus that you're talking about, or your finances in general, I would say stop for a minute, take a look around, assess your inventory where you're at. Whether you won $1 million in the lottery yesterday, or we have this incredible pandemic that's going on out there, it's the cool heads. Eileen was talking, I thought it was a great idea, is to, instead of hunkering down and shutting down and cutting off communication, the exact opposite. I would be in communication with the people that I trust, the people who I invest with, the people who are my tenants, from my landlords, all across the board. I thought, by the way, that these last few days were going to be very quiet. It's been the opposite. Being in communication with everybody, it's been long days, but kind of calming everybody down was really the message that I saw. Moving forward, we've got incredible interest rates. If one of the things that you can do, I would contact, your mortgage professional, because when you think about having 3% rates locked in for 30 years is just a phenomenal idea, because you know that you can get returns better than that somewhere else with your money always.
Yeah. Just those of you that are new to the conversation, debt's a cost of money. So when you're looking at interest rates and you're moving even from a 3.5 and a 4 in a 30-year period, you're talking about an enormous sum of money that you could diversify into other places. So again, talk to your mortgage lender. And I would also say, now that we're bringing you the team conversation, is talk to a variety of them. I think some of you are very fixated on the one person that you've trusted, your accountant, your financial planner, some lawyer, some one person. This is the time to go be in conversations. You can pick up the phone, you can get online and start learning more about the creative options that you're going to have. Eric and Tim, I just want to, there's a lot of questions. I only have 10,000, I only have 20,000. So my first response was, well, why don't that 10 and 20,000, 50,000 of you get together and form an LLC and go buy some property? So what are some other creative solutions? I know, Randy, you've been in it. You've all been on the screen. You've all been in real estate. Other creative ideas for real estate. Now, there's so many that we're going to do a whole show on it, by the way. It might be several days in a row.
One of the things that I'll just add in while we're at that, we've been talking on our radio show a little about what we call prearranged mortgages, or being able to, you have people who are selling and who are willing to allow you to take over existing payments or owner financing. So that 10 and 20,000, I don't see that as being a huge obstacle at all.
Yep. So, Tim, anything you'd add around that?
It's just been my experience that you can get pretty creative in about any kind of deal you can find. So, if you can make it up, you can pretty much put a deal together, even if very little money. That's why I like real estate. It's fun. You can create any kind of deal. I've created every kind of deal imaginable, and I probably haven't even learned a portion of what you can do.
There's going to be owner carrybacks. There are going to be people who, even though they're protected, sounds like they might be mortgages, might be protected. I'm going to jump to the other side because we're on the landlord conversation. I heard some people actually trying to get into rent, and because people that get in can stay in and not be evicted, that in certain segments of the market, and I don't know if any of you guys have heard this one, is that they're not renting. They pulled their ads.
That is a conversation that you're hearing, is whether now is a good time to sell, because people are now, which further aggravates our problem with inventory out there. But the issue about whether it's time to or not rent. But I would just say, be prudent, do the normal screening that you would normally do with a tenant. And now is a fair time to ask a very pointed question. So I would not recommend people pull off their properties.
Me either. All right, let's go to some questions. Steve, some other folks have joined.
Definitely. I'm getting some questions from Instagram, from Facebook Live, and then also just from everybody that is signing up for our live today. I have an Instagram comment that says, I'm scooping up REITs and energy since they were getting beat down so much. And then that goes in with another comment that says, I bought my third house in October. The process took my credit down 100 points. I haven't recovered. If I refinance all 3 properties, how will that affect my credit?
So the first question you've already heard on the oil commodities. This is probably the first time since late 90s when I became a gas and oil investor that I'm actually going to buy into the stock market for gas and oil, just because, and again, I trust Kelly implicitly. So, those are up to you. REITs, I don't buy REITs. Tim and Eric and I don't know if either one of you want to comment on REITs. I'd rather control the asset. So what do you guys say? I'd rather control the asset than go give a REIT to some body that you don't know, that you can't call, that you can't understand what the hell you bought. What do you guys all say about that?
I agree. I like to control it. I don't like somebody else controlling my destiny.
Mm-hmm. Eric, you're shaking your head over there.
I would have to agree 100%.
Yep. The only REIT I think I'm going to go to Randy that I might trust, and Adam, I know you lot, is if it was bought through an algorithm at iFlip. I would control the asset. There's just so much you can do with real estate. I know somebody said, you can start at 500. That must be a fund. I'm not sure or know much about that, but there's a lot you can do. And again, I want to invite you to be more specific with your questions. And honestly, asking a question this way, it's one directional, and we can't ask. There's usually 5 other questions to your one question that we really need to know before we can give a better input. So ask questions also once you get into Millionaires in Training. So team, if we don't have a question for them or a place for homework, we'll just stack it up there and make sure that you get a phone call, but make sure you come prepared. The second question was, as far as the refi, what do you guys think? I'd probably go to Eileen for credit. What do you guys think?
As far as the refi is concerned, actually, there's 5 different factors that are going to determine your score. So you have to look at the total picture. You can't just look at the one element.
Okay. And given how I know, Tim, many of us have done deals, is if you can't qualify, I'd go find OPC and other people's credit. So find someone else to get creative. You don't stop because it's not with you. So notice a lot of just what I'm going to say, input. When you process input, you're processing it whether you yourself can do it, whether you can buy a house, get into the market. I mean, if you actually think the team approach, which we've been talking for decades, a team approach can get you a lot farther. Now, some of you are also going to say, well, oh my gosh, but I've had partners before and been burned. So have I, right? That's been the best of times, the worst of times, but they outweigh being there all by yourself. So if you have properties and you can refi or you've run out of credit, use other people's credit. You can use other people's IRAs. You can use other people's money. There are so many ways to put deals together and structures together that are creative. And you don't have to be accredited when we're talking at those levels of 3 or 4 of you getting together to go buy a duplex or a fourplex. You can do that as individuals without any accredited status. Eric, Tim, Adam, you haven't talked in a while. I don't appreciate shaking your head over there.
Well, I'll just add one other thing as far as the question about refinancing all the 3 properties. There's 2 questions kind of in there. One was if his credit hasn't recovered yet from the purchase. That's one story, and there's some things that you can do to bolster your credit. But as far as the other 3 properties, this is where a really skilled mortgage broker comes in handy, because you can probably do them simultaneously. If you do them sequentially, you'll affect your credit negatively one serially after another. But if you simultaneously do all 3, you'd probably be able to get it done without doing the harm to your credit, preventing you from finishing what you started.
Would agree. Anyone else comment on that?
And the other part of that is when you're applying for any kind of mortgage loans, you have a 45-day window. You can apply 45 times. It's only going to be one inquiry. That's not going to hurt your score.
Wow, that's good information.
That's same with an auto loan, too.
One of the things I'm going to just bring up, pool of potential JV investors. We don't do that. We educate. So I know a lot of people who do that, but I personally don't do it. I know a lot of people think I control the deals. I don't have that. And so if you want to invest in the United States and you're outside of the United States, again, let our team know that we have a pathway for that and know how to do that. In fact, a lot of that would be with what Tim's doing in Boise. Raj wants to know what happened with the Ozarks investments. You can call Justin. We talk on a regular basis. It's all hands go. Nothing's moving. Nothing's changing. The one thing I just want to talk about and love any of you to have input, and I think Tim and I mentioned it just now, Randy's very clear of it, is control. So a lot of you're getting a little out of control on the internet. There's all sorts of stuff. Google is not your due diligence source. It's an information source, but then you need to test it against a lot of other things because anybody can write anything. I'm sure there's all sorts of traditionalists saying, hold your investments. I know Kelly would have a very different opinion about hold and it's all going to come back. It's a crash, folks. It is beyond, it's all going to come back. That's just put your head in the sand because you don't want to learn. But the other thing is watch all the scams that are going to come across the internet. Like if you don't know the people that are doing the deal, don't be like foolish and just wire your money to some random person. I mean, last fall, I had somebody rip me off for 11 Facebook channels. They just misspelled my name because I have lots of E's in my name. They left out an E here and then there and then there, spelled my name wrong 11 different times, which I already knew that because I have the trademark of 11 different things. So I knew about it. But then all of a sudden clients would say, well, why am I wiring you Forex money at 2 a.m? I said, you're not. And so I'm just seeing some of these interesting things come along, and a couple of things. It's up to you, your own money rules, but we on this panel like control. Like I can fly to Boise and see what Tim's doing. I can fly to the Ozarks, see what Justin's doing. I can fly to Scottsdale and see what Randy and Kelly are doing. That if you don't know the people and have deeply vetted them and know what they're actually doing and controlling the project, some of the stuff that's going to run around the internet is going to be ungodly scams. And I think it's going to we haven't really spoke of that, but I'm seeing some of the crap. This isn't a post your crap forum, by the way. So this is about pure education and give, not I'm going to post my stuff that's unvetted, and some of the stuff I don't know who it is. I do know the Lake of the Ozarks, and I know, we all know Justin very well, and that project's full steam ahead. By the way, those of you questioning some of the cannabis projects that have happened inside the community, cannabis is going to go on a rise. Are you kidding? Cannabis and booze are going to go on a rise. Like it's what happens when most people want to put their head in the sand is just not feel it. So I wouldn't worry about any of the cannabis options as well. Any comments from the rest of the panel on some of those things I'm just seeing going on out there?
Well, I think I would bring it back to the opportunity we have right now to think about things and plan for it, and why the hell are you doing it, right? If it's stock market investing or if it's real estate, you got Randy and Kelly on stocks, Eric and Tim on the real estate side. Weldon knows, the tax law better than pretty much anybody we've ever met or will meet. Eileen knows the credit side. And I see a lot of quotes here in the chat box of, well, should I do this? Should I do that? Should I think about this? There's a bigger picture that we need to think about. It's, what do you want? Why do you want it? Which of these areas is going to give you the opportunity for success based on those two things, right? Just because real estate is good. I mean, I'm in Arizona. Houses are flying off the market. It's great. It's not out of control, but things don't sit around. Interest rates are low and people want to be in warm climates. Eric's probably seeing that. Houston may be interesting because of what they're going to get hit on the oil side, and there may be more houses for sale. There may be more opportunity there. But in South Florida, you probably can't buy a whole lot, right? But if real estate is not right for what you specifically want, then you can't worry that it might go up. Or if you don't have the cash in your pocket right now to put in the stock market, you can't worry that it's going to go up. Figure out where you are, what you want, and then reach out to us in the Facebook group. These are the guys that have a lot of specifics. I'm the person who's going to ask you a lot of questions and point you in the right direction of who to talk to, right? We all have our strengths, so utilize us for them, but don't jump from tactic to tactic if you don't have a strategy of why you want any of these things to work for you.
Yeah, and to pull all that back, again, we're going to start back at the beginning. Those of you we've been on for quite a while, we're going to start wrapping up. Kelly just posted a post, what about money rules? So I would say that your money rules are going to be challenged if not changed. Right. Because a lot of you are very, one asset or two asset class centric. And there's some diversity options that you need to be looking at to follow your money rules. Again, go to the Millionaires in Training. The group's been posted several times. And come with a plan. We're going to have P&Ls, balance sheets. We're going to have handouts. Get organized to come to your conversation. And if you want a conversation, you can post it in there. And some of the things I want to head and actually end the call with are some creative income ideas. Because at the end of the day, there isn't anyone, even if you are in the strongest of financial positions, that don't need to be looking at what are you going to do to create extra income. So between Adam and Randy and I know specifically, Adam, you and I will go, really live and talk about how to do it. I've asked my team, we have from the Cash Machine book, 1,000 ways you can generate ideas. And, again, online training, homeschooling, delivery of food, home chefs. I mean, there's going to be so many things that are necessary right now to help a lot of you through this. I was on a different call, and with the amount of the assisted living folks that are really not even allowed visitors anymore. I mean, we have a world-leading woman, Sandra. I've got to go, I've talked to her in a long time, but she was the first one that came to mind. She had a hell of a time trying to sell her book. And I'm like, now's your time. Like, people need to know, how do you manage remote and elder care? How do you handle that? And if you're an expert in that, there's a huge need for your skills. So a lot of you have a lot to offer, and you haven't come to the playing field because you've been scared about growing a business in some traditional brick and mortar area. This is all that's off. I mean, there are so many creative ways that you're going to be able to make money. So we're going to post into our Millionaires in Training Facebook group. We're going to be posting 1,000 different business ideas. Adam has a great marketing platform for a whole year. I've asked him to post some of that. And again, think about what you could do to make money. Be careful on the opportunistic side. People are getting blasted. Steve actually was sharing with us how a lot of this started with a family out of Tennessee that bought a bunch of hand sanitizer, seeing it coming, and then rerouted it and sold it on Amazon for like $70 per bottle of hand sanitizer, and now getting punished for that. Some little kid got expelled for school, taking an entrepreneurial idea off of that, and got expelled for school because he was charging 65 cents a pump for hand sanitizer. So there's some weird shit going on, but I can tell you, get creative. Like, get creative, stay legal, stay ethical, take care of each other. But if your family really needs help, like, that's what we've been here. We've been in decades of training for this very moment to be in conversations to help you and your family, and very specifically structure, how are you going to make your money? How are you going to keep it? How are you going to get some deferred payments? How do you use any of the government or the assisted help and care that is needed? We'll be coming live with links. It'll all be put in the Millionaires in Training. Andrew, Steve, and the team are working on a site right now to organize the resources we're going to provide you. So we want to be the trusted place, the place you get to come. You get to hear from Kelly, hear from Eric, hear from Eileen. If you have specific questions, I'll be facilitating the advice of all these folks. And we're excited that you have begun the conversation. And we're going to be here every day until we walk through and we can see some visibility at the end.
Thanks for listening to the Real Money Talks podcast. Your host has been Laurel Langmeyer, author of 5 New York Times bestsellers, money expert on Dr. Phil, CNN, CNBC, The Street TV, Fox News, and The View. Want to learn more about off-Wall Street investing, tax strategies, and multi-million-dollar business strategies? Visit liveoutloud.com/podcast for past episodes, show notes, and resources. For some special wealth-building gifts only for Laurel's podcast listeners, visit liveoutloud.com/podcast gifts. Do you have a burning question for Laurel? Visit asklaurel.com to submit your question, and it may just be covered on a podcast episode. So stay tuned and be sure to subscribe to get new episodes every week.